Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about a classical charting pattern called a bullish hook reversal. You can pause and read this on your own time. And I have a video covering both the bullish and the bearish. But for today's lesson, I think we should just kind of drill in on a bullish hook reversal. So for it to be a reversal, you need to have a trend first. And it talks about here the context. It occurs during a downtrend. So let's pull that up and see what that might look like. When you have the price traveling down, and then you form a mother bar. The next candle becomes an inside bar. Let's take a look at an image. So move down, move down, move down. Here's your mother bar and an inside bar. Now, there's all sorts of patterns with tightening ranges. You have double inside, you got bear pennant, bull pennant, all sorts of stuff like that. But this is very specifically a two-candle pattern, a bullish hook reversal, where the second candle is completely contained within the prior candle. Now, you may think, that's kind of like the harami in Japanese candlestick theory. Well, the difference with the harami is you have the move down, and here's your mother bar, and then you may have the candle body inside it, but the wicks maybe go lower or maybe even higher, potentially, theoretically, right? It's also a two candlestick reversal in Japanese candlestick theory, but in the hook reversal, you have the move down, and you have the mother bar. The entire range of the second candle must be contained within the prior candle or the mother bar. Now, volume is a very important clue. We know volume comes at bottoms and tops. We know volume comes when a trend is challenged by the counter trend force. So in this two candlestick pattern, mild volume, big volume, and the same is true for the harami. You want to have big volume on the second candle, showing that the prior trend has been challenged, right? Volume is going to be a very important clue. We see the bullish hook reversal here. In theory, you can take a trade on the break of the inside bar, but here's a little bit more conservative. It's probably the way I would do it, where you would take a trade on the break of the mother bar itself. So you wait for it to clear the prior candle before, and then you can use that to manage your risk. You could use even a stop loss on the wick of the inside bar and entering on the break of the mother bar, for example. But it's very simply just a two-bar pattern. You don't have to get too complicated. It's a reversal pattern after a move down where you have a big candle and then an inside bar. And the inside bar has more volume, ideally at least 1.5 times the volume of the prior candle, to give you a sense that the trend is reversing or potentially starting to reverse, and you should be on watch for some confirmation. In this case, as I said, probably a break of the mother bar. This is the bullish hook reversal pattern, and this is for the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you, folks, and I'll talk to you soon. Big Chads out.